Today, Bitcoin falls below $40,000 once again. The SEC delays its decision on BlackRock's spot Ethereum ETF, and CleanSpark CEO Zachary Bradford explains how the Bitcoin miner is preparing for the upcoming halving. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto prices are back in the red today. As of noon Eastern, Bitcoin slid below the $40,000 level, trading around $39,680. Ether and Solana both dropped more than 2%, with Ether falling below the $2,200 mark. Okay, let's talk about the top stories. The SEC is pushing back its decision on BlackRock's proposed spot Ethereum ETF. The reason for the delay? Well, in this filing from yesterday, the agency said it needs more time to review the proposed rule change. Now, this marks the first of several delays the SEC can employ before the regulator must announce a final decision for this ETF. That has to happen within a 240-day period from when the SEC opens comments on the applications. Late last year, BlackRock filed an application with the SEC to convert its Ethereum trust into an ETF. Now, a final decision on all pending spot Ether ETFs, including BlackRock's, could come in May, as that's the earliest final deadline out of all the applicants. That would be similar to the SEC's decision on all the spot Bitcoin ETF applications, which were approved all at once on January 10th. Now, BlackRock, Invesco, ARK, and VanEck are among the firms in line for approval for a spot Ether ETF, as well as Grayscale, which is seeking to convert its existing Ethereum trust into an ETF. Next, Bitwise says that it's the first U.S. Bitcoin ETF provider to publish the addresses of its Bitcoin holdings. The asset manager posted its wallet address on X, saying anyone can verify its holdings and flows for its BITB fund right on the blockchain. We looked up the address, and according to CoinTracker, the wallet currently holds about $488 million in Bitcoin. Bitwise said the move was the first step toward increasing public transparency and hopes to do more in the future. Finally, North Carolina Congressman Patrick McHenry joined CNBC Squawk Box this morning and discussed Capitol Hill's progress on regulating digital assets. McHenry is a big proponent of crypto and has a few bills before the House to create new guidelines for the industry. Those have been on hold, though, as Congress has wrestled with budget talks and internal fighting.
Look, when the House basically attempted to commit political suicide, Republicans in the House tried to commit political suicide in the fall, it gummed up 3 or 4 months of House floor action. So I've got major policies in capital formation, data privacy, and crypto that we haven't moved across the House floor, and I intend to get those moved across the House floor this year. We can still do big deals. Even amidst the longest presidential campaign, general election campaign in American history, we can still get these things done and build consensus, and I think there's a need for market structure on crypto.
Now, if these bills don't make it through Congress this year, they'll be set aside. On top of that, McHenry is retiring at the end of this term, so he won't be in Congress to reintroduce the bills next year. All right, let's talk about Bitcoin mining for our main story. Crypto World's Tanea McKeel got the chance to sit down with Zachary Bradford, the CEO of CleanSpark, and he breaks down how the miner is preparing for the upcoming halving.
CleanSpark wrapped up 2023 in a pretty good position. The company mined nearly 7,400 Bitcoin and saw its yearly revenue grow $37 million from a year prior, reaching $168 million. Now the Bitcoin miner is turning its sights to 2024 and faces some major milestones for the network, including the halving and a wave of new adoption from Wall Street. CleanSpark kicked off the year by announcing plans to launch an in-house trading desk with the hope that it can make use of its Bitcoin holdings. I asked CEO Zachary Bradford about the timing of that decision.
The now came because our Bitcoin balance has gotten large enough. So we have just over 3,000 Bitcoin as of now on our balance sheet, and we're believers on it on a long-term basis increasing in value. But unlike a money market or something like that, where when you put your money in the bank, you get a little bit of interest, we're really basing 100% of its value increase on a very long-term thesis. So now that we have a larger balance, we believe we want to bring it in-house, and that trading desk would only serve our Bitcoin. We wouldn't have outside clients, we wouldn't create products or anything, but we would have traders that work for our company, and they would then trade that Bitcoin to generate a little bit of yield based on the volatility of Bitcoin.
Of course, I also had to ask him about the recent launch of spot Bitcoin ETFs and the recent selling pressure on Bitcoin.
I think what at least we believe we're seeing is, these ETFs, they're from traditional finance, and they were smart about how they moved into Bitcoin. They didn't want to push the price up overnight. They wanted to have a nice, smooth entry point, and because frankly, that would allow them to have larger returns that they would be able to show their shareholders over time. So we see this as something that's going to provide a tailwind for the price action of Bitcoin, which then benefits the miners because it affects supply and demand. So all the buying that they have should be patient and long-term buying that will kind of soak up that supply in the market and to a certain degree, permanently put it on a shelf.
Now looking ahead, all miners are gearing up for the halving when mining rewards will be cut in half overnight. I asked Bradford how his business is preparing for that event and how it intends to weather the volatility that's expected post-halving.
If you measure revenue with Bitcoin, our revenue would be cut in half in a single day. When measured in dollars, though, which is what all of us report to, as public companies, especially in the SEC, that's what goes out to the public. We believe that, again, Bitcoin's value will go up. So revenues may take a near term, that day the impact occurs, and we think it'll recover quickly over time. But more importantly, if you think about the Bitcoin rewards as, the pie got smaller and all the miners that exist, it's about the size of that pie. We think that there will be miners that are less efficient and can't handle that revenue shock. So we think as many as 30% or 15 to 30% of miners will actually have to turn off, shut down.
So with some miners expected to fare worse than others after the halving, I asked Bradford if he expects failures among Bitcoin miners and if CleanSpark could acquire any of them.
I think that we will see failures in the space. We already saw in the last market, there were a couple bankruptcies, both in the public and the private space. I think we're going to see that again. So I think that there's going to be great opportunity on an M&A basis. We're thinking about the facilities or the data centers that miners are operating in. If there's a data center full of old equipment that is no longer efficient, we'd love to buy the facility and move in. And I think that there's going to be a lot of similarly mined operators as Bitcoin miners. So I think that's where we're going to see a lot of consolidation and acquisitions. Will be really around the real estate holdings, maybe less around the actual companies. And the companies, as a result, may fall by the wayside, some of them. I'm also a big believer that in the next 4 years, there's only going to be 3 to 4 winners in the space because, from a capital markets point of view, let's think of tech. Do people invest in Apple or the new startup? Well, they invest in the new startup when they believe it has a lot of upside. When they want the sure thing, they invest in Apple. And I think what we're going to see is as some of the miners get bigger and bigger, that flight to quality is going to be more important. And as a result, it's going to become an outsize. There's going to be 3 or 4 winners, just like, there are 3 or 4 cell phone providers that people actually buy their cell phones from.
CleanSpark itself still faces stiff competition from other publicly traded miners like Riot and Marathon, both of which saw huge gains in 2023 and hope to keep the momentum going in 2024.
We've spent years, preparing, and we're already going to start thinking about 28 as soon as the next halving event occurs. But it's about timing the market. I'm a big believer in timing. And that's not always, there's multiple approaches. You can take a dollar cost average approach to your investment thesis, or you can take a thesis of timing the market. So we've actually chose to invest in the last bull market, and we're going to try and time before the next bull market takes off. So for us, that's going to be when do you get in and when is it too late? That's going to be the hard part, we think, is really trying to time the market to get the best value.
Okay, before we go, let's get to one last thing. Eco, the company behind crypto wallet Beam, announced today that it acquired an app that lets people pay for online purchases using stablecoins. That deal means Beam wallet users can soon spend stablecoins at places like Amazon and more. We'll be talking with the CEO of Beam tomorrow about that announcement and why he thinks spot Bitcoin ETFs step away from the ideals of crypto. Be sure to catch us then.